Just want to thank everybody for taking time to do this today. If someone had told me a year ago that I would be doing a virtual press conference, I would have laughed them out of the room. But we got to do what we got to do. And I actually think they removed some barriers to entry, and they increased turnout and attention for the press. So I'm all about that. So just if you could raise your hands and let me know if you can hear me. Right, cool. Just so I know I'm not talking to an empty room here. So before I go through introductions, a couple of quick points. The Zoom is set to speaker mode, so please mute your line if you aren't speaking. The record function is on, and you are free to record. Obviously, everything said here is on the record. Once the speaking portion is completed, we'll open it up to questions. As many of you know, my name is Doug Mayer, and I'm here today representing the Marylanders for Tax Fairness Coalition. Joining us today are Lieutenant Governor Boyd Rutherford, House Minority Leader Nic Kipke, Dr. Francis Tony Draper, the CEO and publisher of the AFRO, Rebecca Snyder, the Executive Director of the Maryland, Delaware, and DC Press Association, Mike O'Halloran, the Maryland State Director for the NFIB, and I'm going to mess this name up, but my new friend, Pasquale Calorante, he is a small businessman from Anne Arundel County and the owner of Bella Napoli, which I heard is excellent, so everybody should go out there and give it a try. Quick overview. Marylanders for Tax Fairness was started this past November, and our goal is pretty simple: to persuade the Maryland General Assembly to allow Governor Hogan's veto of House Bill 732, the digital ad tax, to stand during our current legislative session. My friends at the nonpartisan Department of Legislative Services has estimated that HB 732 will cost Maryland taxpayers approximately $250 million every year. Since November, when we launched, our coalition has grown. We're now over 200 Maryland businesses of all sizes and organizations, and more than 8,000 Marylanders have signed our petition to stop this tax. Over the last 2 weeks, more than 12,000 emails from our supporters have been sent to legislators, encouraging them to allow the governor's veto to stand. With a possible vote on this veto happening next week, I hear, it's more important than ever for Marylanders to know what is happening in Annapolis, and I appreciate the press attendance and coverage of what we're going to discuss here today. One more quick note before the Lieutenant Governor speaks, and this is really important. Throughout this press conference, you will repeatedly hear about these taxes and costs ultimately being paid by Maryland businesses. This is actually a point of agreement we have with the main sponsor of this tax, Senate President Bill Ferguson. The Senate President is a person that I like and respect. He has at least twice admitted that HB 732 will actually end up hurting Marylanders. First, during Senate testimony on this bill last year, and then just 2 weeks ago on the C4 show. So please, when you report on this, it's not just the speakers here saying that Marylanders are going to be paying these taxes and costs. It's the Senate President as well. So with all that said, LG, you're up, sir.
Well, thank you, Doug, for that introduction. I guess it wasn't an introduction, a call up. Good morning, everyone. It's a pleasure for me to join you this morning, and I want to give a special thanks to Delegate Kipke and Dr. Draper. As I mentioned to her a few minutes ago, it's good to see you. And all the esteemed guests, representatives, coalition members who are here today to bring attention to this serious matter. At the outset, or I should say onset of the COVID-19 pandemic last year, it was a time of great uncertainty, and at the beginning of what would be for many Maryland workers, small businesses, an incredibly challenging year financially as well as emotionally. The General Assembly rushed through a deeply flawed bill in the 11th hour, in an already rushed session without public input, without follow-up or following, I should say, the normal legislative process. House Bill 732, the digital advertising gross revenue tax, will raise taxes on every person and business that advertises services online. This isn't just a tax on large corporations with smartphone apps and curbside pickup and free 24-hour shipping. It's also a tax on the small mom and pop stores, local Main Street small businesses, and ones who have had to adapt and retool their entire business model due to the pandemic. Or even your next door neighbor that is creative, who started selling their homemade soaps and jewelry online to make ends meet, just wanting to reach more customers, are going to be impacted by this. And just a couple of weeks ago when I was in Bel Air and doing a Main Street tour there, talking to a number of the local businesses there, they have shifted to online marketing because they don't have the foot traffic. And, and they're advertising online to make sure that people know about their goods and services, and they're selling online, something that a couple of the businesses said that they had been resistant to up until the point of the pandemic. Now, when Governor Hogan vetoed the bill last year, it was clear that we were facing an incredibly challenging economic recovery as a result of the pandemic, and that government was going to lose revenue, and that we were going to have to take and make some hard, honest decisions with regard to state financing, just as folks at home have to do every day and had to do particularly over the last year. So it should go without saying, it's simply not a time to raise taxes on hardworking Marylanders and small businesses. The power of taxing is one of the most important powers that government has. And unfortunately, the General Assembly far too often wields this power indiscriminately without regard to the consequences of such actions rather than their intentions. The philosopher John Stuart Mill said it aptly at one point when he said, "The intentions of an action tell you about the morality of the individual, and the consequences of the act tell you about the morality of the act." So while the argument could be made that the intentions of raising revenue for the state to fund necessary government services is a good thing, it is extremely hard to deny the negative consequences of raising $250 million taxes on Marylanders and struggling small businesses, particularly during a worldwide pandemic, while so many of these businesses and individuals are struggling just to hang on. And this has the effect, or has an effect, I should say, on all Marylanders, because when the cost of doing business goes up, that cost gets passed down to consumers. Businesses of all sizes now market online, especially in this time, and they utilize the internet even more than they did pre-pandemic. Legislators, they think that taxing big out-of-state companies is the best way to go, but the truth is that it's going to be Maryland businesses of all sizes that are going to be impacted at a time when many of them are fighting to stay afloat and to keep and pay their employees. And just a few weeks ago, as Doug mentioned, Senate President Ferguson admitted that small businesses and entrepreneurs would be the ones paying this tax. Now, while we have reason to hope that in the near future this pandemic is going to be over, we know that it is still much too early to start raising taxes on businesses, and there's a lot of work that's going to be needed, that we need to do to get back to some form of normalcy around here. So before the pandemic, our administration had worked really hard to make Maryland more business friendly, and our economy was healthy and it was on the right track. And if Governor Hogan's veto is overridden, Maryland would have the notorious distinction of being the only state in the country to enact a digital advertising tax. As we attempt to rebound from this pandemic, that distinction will not help us endear businesses to do business with us, to come to our state, and to try to attract customers. Ultimately, we should be doing everything in our power to make sure that our businesses are able to survive right here in Maryland and show businesses and job creators that we value them and we want them in our state. So House Bill 732 does the exact opposite of all of that. And the governor's veto should be upheld. So thank you.
Cool. Thank you, Mr. Lieutenant Governor. Really appreciate that. Delegate, House Minority Leader Nic Kipke, you're up, sir. And you're on mute, brother.
Thank you. I should have looked at the Lieutenant Governor's written remarks so I could have created something different now. You did a great job, Lieutenant Governor. And, you know, this issue makes me think about the time that I served in the legislature when Governor Martin O'Malley was in office. And there were countless attempts and successful implementation of tax hikes, increases, and new taxes. And it was a very depressing time because countless people decided to move out of the state of Maryland. And I'm fearful that these types of efforts to raise taxes like this will begin to motivate the same type of negative economic consequences that we saw during that time. You know, the pandemic aside, Maryland is already one of the highest tax states in the nation. It serves as a disservice to innovation, to bringing into our state entrepreneurialism, and frankly, whether it's you know, a small mom and pop business or a large corporation, they take these things into account when they decide where they're going to do business. And so, you know, as a general economic policy, this bill is wrong and will actually harm our economy. One of the reasons I think it will harm our economy is because, for example, if you take out an ad in a newspaper or you take out a TV commercial, you don't get taxed in this way. But most of the types of advertisements that are going on these days are going on online. And so you're going to tax somebody trying to spur economic activity. So whether it's a little company around on your main street or a large company in Baltimore or Montgomery County, they're trying to spur economic activity that can be taxed. But taxing people's ability to spur economic activity, I think, is a poorly designed, poorly crafted way to raise revenue. With the pandemic in mind, you know, I think about so many people. For example, my dry cleaners, one of the most wonderful ladies I know. Sunny has this great business that's basically gone empty. You know, no one's wearing their suits or their dresses, and you know, they're not bringing dry cleaning in to see Sunny. Well, Sunny, to survive and to pay the bills, has been advertising online her tailoring services, and she says this is something that's been able to help her, you know, stay in business. You know, I just think it's cruel to throw an additional burden on somebody like Sunny. To tax the ads that she's taking out to try to stay afloat, keep her business going. And lastly, you know, after the governor spoke yesterday at the State of the State, the majority leader said that this is a tax on Google. That's just nonsense. That couldn't be farther from the truth. This is a tax on your local barbershop, your local salon, your local restaurant, your local dry cleaners, all these businesses that have been harmed because of the pandemic are the ones that are going to pay this tax. And while, you know, there's always unending needs, unending wants that people come to the legislature for, I think now this is a very important time for us to put small and independent businesses first in mind, considering everything that they've been through. And I'll be voting to sustain the governor's veto, and I encourage my colleagues to do so as well. Thank you.
Thank you, sir. Very well said. Next up is my new friend, Dr. Tony Draper.
Well, first of all, good morning, everyone. Lieutenant Governor, thank you for that greeting. Good morning to you, Delegate Kipke. As Doug said, my name is Frances Tony Draper. I'm the publisher of the 128-year-old Afro-American newspaper, which was founded in 1892 by my great-grandfather right here in Maryland. His name was John Henry Murphy Sr. And he founded this newspaper when reportedly less than 2% of the African-American population could even read, but he knew it was important to get our news out to our respective communities. And so as my fellow colleagues in media who are on this call, especially those of you who are in print journalism, as you know, our print advertising base has been shrinking over the years. That's not new news. We all know that, and we know the struggle it is to even keep qualified journalists in newsrooms, and that's why many newsrooms are either going nonprofit or are looking for philanthropic ways to sustain and maintain. And so we're already under a lot of pressure. And as we have all pivoted, to use that overworked word that we seem to have said a lot in 2020, in addition to you're on mute, that's the other overworked phrase. But as we have pivoted, all of us, to look for new revenue sources, a few years ago, many of us just, we just went into the digital space to figure out how we replace advertising that was lost because of the diminishing, readership. And so that was a lane we were already in. It was accelerated because of the pandemic. And so a lot of our revenue and our business does come from digital ads. And so this is really, this bill would have a devastating impact, especially on smaller media companies. It'll have an impact on every media company, because as you know, we will end up passing that tax on to the consumer. And when that happens, the volume is likely to go down just because no one can afford to pay more. And so I come on this press conference, participate today, just to say that this is not a good idea, not at this time, but really not at any time. I don't want to say just not at this time, and then it come back up in the next round and somebody says, okay, but how about now? Is this a good time? It's just not a good idea to do it at all, because it will have a devastating impact, especially on those of us who are in the small to medium size, media are part of those media entities that depend so heavily. And so I don't know about your businesses, but in our business, which was at one time 100% print, you can see how the ratios are changing, and it's almost 50-50 now. And I would imagine, given the way things are going, it'll even be a greater percentage of digital versus print advertising going forward. And so I am also in support of having the governor's veto not to be overridden. This is not a partisan thing. I am sorry that it's become that. This is an economic thing, and this is a matter of survival for the AFRO and for other businesses.
Thank you, Dr. Draper. Appreciate you being here today, and very well said. Next up is Rebecca Snyder, the Executive Director of the Maryland, Delaware, DC Press Association. Rebecca?
Thanks, Doug, and thank you to everyone who's spoken out today. As Doug said, I'm Rebecca Snyder. I'm the Executive Director of the Maryland, Delaware, DC Press Association. And I wanted to bring up a couple things about local media, but first, the reason that there is no advertising tax anywhere else in the country. It's because oftentimes the goods and services that advertising is promoting are already taxed. And so what this bill contemplates is a tax upon a tax. And as Dr. Draper said, oftentimes advertising budgets are not elastic. So what's going to happen if the cost of advertising goes up, which we believe it will because of this tax, the amount of advertising in the marketplace will go down. And so Delegate Kipke's dry cleaning person, the restaurant that's just advertising to say, yes, our doors are still open, come have carry out. They will all be affected. And that is going to, in turn, affect your local media. Local media relies on local advertisers. There's no way around that. We are connected to our communities. And I hear from our membership, so newspapers, news websites, I hear from broadcasters. We talk often, and I know the economic pressures that they're feeling because their advertisers are under those pressures. And when there's not local advertising, local news coverage will suffer. It's kind of a fact, but reporters are cost centers in our news media outlets, and they're paid for by advertising or subscription. And so when you think about broadcasting, there's not subscription revenue even. So we're really looking at diminishing local coverage if this tax goes through. And Dr. Draper had talked a little bit about how the advertising marketplace is shifting. And that, in fact, is the case. We are seeing digital advertising as a growth center as audiences become more mobile, as they are looking more to their phones and to their desktops, and different advertising ways are being figured out to reach those audiences. We also know that Maryland is in a tight regional population hub that is very transient. So this tax looks specifically at ads seen in Maryland, which is a confusing thing to untangle. And of course, the comptroller's office has to deal with that. And hopefully they can in a cogent way. But what it could also do, not only decimate local media, local advertisers, and local businesses, but it can drive people outside of our borders, outside of Maryland for their advertising and for their advertising purposes. So we do believe that this tax is going to raise the cost of advertising. We do believe that it will hurt local media. And we ask everyone to stand with your local news sources and reject this ad tax. It's not good for Maryland. It's not a good time. And it's not good for businesses in general. So, there's a lot of risk to be the first in doing anything. And there's a reason that there is no other state that has a digital or any type of advertising tax. So thank you, Doug. Back to you.
As always, extremely informative. And I think one of the most important points you made right there was that advertising isn't taxed in this country for the most part. And, you know, for Maryland to be the first people to go into this on the digital front when none of our neighbors are doing that, that will certainly have an effect. Next up is Mike O'Halloran, the Maryland State Director, NFIB.
Well, thank you, Doug, and thank you, Lieutenant Governor Rutherford, Dr. Draper, Delegate Kipke, Rebecca Pasquale. It's an honor to be on this virtual dais with such esteemed folks. In Maryland, look, we all know the economic crisis COVID-19 has created. There isn't a corner of our society it has not touched. Marylanders from every walk of life have been impacted. Nowadays, people are having to rethink their financial priorities, and frankly, small business owners are too. Here at NFIB, the voice of Maryland's small businesses, we're hearing from how they've been disproportionately hit the hardest by this pandemic. With supply costs rising, bills piling up, and many still facing capacity restrictions, they're just in no position to absorb added costs. So last year's House Bill 732 and the digital ad tax is one of those such costs. We were already seeing, and you've heard today, how technology and the use of social media platforms was changing the way we do business. Well, obviously the pandemic has sent that into hyperdrive. We are seeing small businesses turn to these platforms like we never have before. It's been a valuable tool, frankly, over the past year because our small businesses haven't been able to do their traditional advertising. Things like sponsoring Little League teams, sponsoring parade floats, participating in community events, all these things that we're so used to and frankly take for granted, small businesses just aren't able to get themselves out there the way they used to because of this temporary but new reality that we find ourselves in. So overriding the governor's veto of the digital ad tax is simply the wrong idea at the wrong time for Maryland small businesses. And to add on Dr. Draper's point about, you know, it isn't just the wrong time now, it's just the wrong idea. You know, we certainly don't want to, in a year or two or a year or three, as certainly Delegate Kipke can attest to, we don't want to see this idea come back. That it's just, here we are in the grips of an economic crisis. Maybe we'll pass this in years to come. No, it's simply a bad idea for small businesses, and the legislature would serve itself well by upholding the governor's veto.
Great. Thank you, Mike. Well said. Appreciate that. Next up is our last speaker, Pasquale Cavarante. Did I get that right? And you're on mute, Pasquale.
Yeah, me, myself. Hey, guys, thank you very much. It is an honor to be on this call with all of you. I'm actually almost feel almost unworthy to be on here. But thank you again, Doug, for the invite. Thank you, everybody, all the speakers here who are fighting against this tax and to uphold the governor's veto. My name is Pasquale Cavarante. I've been a small business owner here in Pasadena for the last 19 years. We've owned a Bellinopoly Italian restaurant. I actually also own a real estate company in the name of Remax Experience. And something that a lot of people aren't realizing, from the smallest of small businesses to a Fortune 500 company like Pepsi, Coke, Nike, these people all have advertising budgets. So by adding another tax on this, on the social media advertising, what you're doing is you're reducing the amount of people that we can actually reach and get in front of, which then in turn reduces our income, which then reduces your taxes coming in. It's just a really bad idea for a bad tax. We've been in business for 19 years because of our work ethic, but also because of social media advertising, ad spend. We spend about 10% of our income every year towards advertising. Now that same 10% is going to have to pay for less if this veto is overridden. I just think it's an incredibly bad idea and a bad time. It's just going to put way too much stress on our businesses that right now are struggling as it is because of COVID and other restrictions that have been put in place. And to Dr. Draper's point, I don't think there's ever a good point in time to increase the cost of advertising to get business, because in that portion, it's going to reduce the income for the state. I think that in any way you cut it, this is just a bad idea.
Great. Thank you, Pasquale. Really appreciate that. I wish I had something like really pithy to add, as I'm known for, to all these speakers and what they said, but I think they really covered a lot of the points. Before we open up the questions, I think I'll just say that, I think Senate President Ferguson and some other folks in the legislature who are really pushing this are using this bill to take a swing at out-of-state kind of faceless big corporations, but they're swinging and missing, right, and hitting their own constituents in the mouth. And, what's frustrating is that Senate President Ferguson seems to admit it at the same time. And so I would just really hope that the people, the reporters on this call, ask him how he can hold these two views at the same time. One, he supports pushing this forward while also admitting that, Marylanders and Maryland businesses are the ones that are going to be paying for it, especially right now. So with that said, I will open it up to any questions from the members of the press that there may be. And you guys could ask questions directly to individuals who are on the call, or to me, since I know how much you love talking to me in general. Pam, nothing? All right, guys. Well, you know what that means? It means they all completely agree with us, and we're going to get incredible stories. So going once, going twice.
Hey, Doug.
Right. Oh, Danielle. See, I asked for homework and I got it. Danielle.
Sorry. I was trying to get the kid quiet for a minute.
No, it's cool.
I did want to know, so this is a tax. The way that it would actually work is that it would be levied on the biggest businesses.
Sure.
And, you argue that they would pass those costs down to smaller businesses and then to consumers.
Right.
But presumably that would be levied, proportional to how much advertising someone's buying. So Home Depot would have a really big bill, for example. But do you have have you quantified what this might actually cost a small business in Maryland if the full cost was passed down to them?
I haven't been able to do that, and really, and quite frankly, not a lot of other people have been able to do it either, just because it's never really been done before. You know, some people have estimated that it's at least a 10% increase in advertising costs across the board. So maybe Rebecca, do you have a better idea on that?
Not at a macro level, Danielle, but so the companies who sell advertising, the largest global gross annual revenues companies, so like your Facebook, your Google, some of the underpinning core advertising for small businesses would be taxed at that 10% rate. So I think if Facebook decides to just add a line item tax that gets passed on directly to that small business, they will be paying 10% more. So even if you go down in that tiered tax rate, and you know, I'm on the local media jam, so that's what I'm going to bring out. Even our members who might be taxed at a lower level need to make sure that the accounting's right. So the 2.5% tax at the lowest level, if that just gets passed on, sure, you could do that for running in like a local media website or something like that. But smaller companies need to proportionally spend more on kind of the wraparound to administer this tax. It's a super confusing tax. No one understands or knows how the comptroller is going to promulgate regulations and what's going to be required. So I think it misses the mark a little bit as you get into those smaller tiers. It's so easy to brush off and be like, oh, it's 2.5%, whatever, you know, it's pennies, until you think what it takes to administer. So not only do you have to kind of rework a lot of your accounting things, you have to keep track of the tax to send to the comptroller. You have to do all these pieces that need to be made up from scratch. So I think that we're talking floors when we're talking about those tiers and ultimate costs, as opposed to just, oh, it's a straight pass through. Does that help a little bit?
Yeah, much better than I could have answered it. Awesome. Well, this is cool. I see Pam has a question. Sorry, Brian. You're next.
Thanks, Doug. I have a strategy question. What are the realistic chances this coalition has of flipping enough votes in either the House or the Senate in order to sustain the veto?
Well, listen, if the legislators who are getting thousands of emails care about what their constituents think, if they respect their opinions and they don't want to hurt small businesses, then they won't override the veto. It's as simple as that. If Senate President Ferguson listens to his own statements, right, they won't pass the veto. But you know just as well as I do that it's a tough environment. They've got a veto-proof majority. But I give us a fighter's chance or a puncher's chance, and we're going to keep making our case until, if I can get another sports analogy in here, until the whistle blows. Brian?
I think Pam asked my question in general, but I guess I'll come at it from a different angle. Assuming that the math doesn't change, is there a court challenge in here?
That's not for our organization to say. And I've played a lawyer in many a conference room, but I think this is also a pretty damn clear case of tax discrimination. On top of that, Rebecca hinted at it. If you look at this bill, God bless anybody in the comptroller's office actually trying to make it work. So we'll see. I've read other places people talk. There's other kind of news reports of potential lawsuits. So we'll have to see. I think the smarter thing to do, because listen, it's not just the tax that hurts; it's the tax on Maryland's reputation as well. I mean, I'm sure you guys will love this, but a lot of these people are the same people who tried to tax the rain, right? We've been down this before. And now they're trying to be the first in the country to tax digital advertising. DC, because this has been tried in other places and failed, most recently in Washington, DC. I don't know why we have to be the first in the nation to implement this when it clearly will have negative effects. This is a business-to-business expense. And for the most part, business-to-business expenses are not taxed in this country and other sophisticated economies because of the number one, it's very easy to pass those taxes and costs on, and it hurts overall business growth.
I would just add to that, just sort of the historical aspect. The only ad tax that was really tried was in Florida, I want to say like 30 years ago.
Much different Florida.
Much different Florida, much different advertising landscape. So there you were, we're looking really in just kind of a print and broadcast milieu. And I believe that advertising in the state fell by like 20 or 30%. It was a sizable amount. And so much so that the legislature came back 8 months later and repealed that tax. So citing the complexity of administration, the loss of business to other states, and the general, hurtful nature of it to Florida businesses. Now, I'm not stuck in the sands of time. Like, I get that it's a different world, but I think the world has only become more complex in terms of advertising. It's only become more complex in the way one would administer this tax. And in some ways, as populations become more transient, it's only become more tightly knit, and people can vote with their feet, essentially.
Rebecca, quick follow-up. You've talked about the tax and the history of it. There was a similar tax passed and later struck down in Baltimore City, mostly because of concerns of First Amendment issues. Does MDDC believe that there are similar First Amendment issues here?
So I think we've been talking about it. For us, we don't want to go down that path. We want to try and make sure that the legislature knows what this is going to do for small business and local media. So I would think there are some constitutional issues, some First Amendment issues. I don't know all the details and ins and outs of that. That's really for attorneys to kind of talk through more, but I know those discussions are happening.
Brian, I'll let you know that the Department of Legislative Services is not baking into the revenue estimates the taxes that would come from this, where they are baking into other taxes that are have the potential to be overridden next week. And their analysis to the legislative leaders is that it's highly likely to be challenged successfully in court based on prior attempts at this. And so with that in mind, I find it, if I was, it's very, it's easy for me to vote against this tax. But I'll tell you, I'm getting a lot of emails from small business owners who are struggling. I know my colleagues are as well. I don't understand why they would push forward with something that has the potential to be thrown out. So much as what the DLS is saying is likely to happen. And you're just, it's almost cruel to just ignore these small businesses that are struggling, that are contacting us. I mean, this seems like an easy win. Let's let the override stand and provide at least psychological relief to the small business owners in all of our communities who have been through so much over the last year.
Yeah, and I would just say, go ahead,
Could I just add to something that Delegate Kipke said, and actually hat tip to Dr. Draper to get me the facts and figures on Florida. In Florida, 30 years ago, it actually cost the state more to administer the new tax than it collected overall. So in getting facts and figures, thank you so much, Tony, on this. Advertising purchases decreased by 12%. Revenues dropped by $100 million. This is, 1987. So some of us weren't even around then. I was. Florida lost 50,000 jobs, 2.5 billion in personal income, and all that was traced back to the ad tax. So, and it was repealed after 6 months. So I think if that's the only example we have to go by, my goodness, why risk this? Local media can't risk it. Small business can't risk it. I cannot assure my members that life is going to be okay, and Google and Facebook are stepping up to do their share with with examples like that. It's too scary to contemplate. There's too much on the line.
And Rebecca, just to piggyback on that, if you follow what Delegate Kipke was talking about with the Department of Legislative Services, frankly not baking in those estimations moving forward, well, the logical next question is the juice even worth the squeeze? And frankly, our small businesses are telling these legislators that it is not. Whether or not this gets tied up in a lengthy court proceeding, at the end of the day, whether it's successful or not, small businesses are telling them, we are fighting for our lives. We don't want to see Rome burn while we're, debating whether or not this is constitutional or not. The fact is, a tax can very well be hanging over the heads of small business owners. And that's the last thing we need to focus our energies on. Our energies need to focus on getting Marylanders back to work as quickly and as safely as possible so we can return to some sort of sense of normalcy.
Fantastic. All right. With that, guys, I think I need to say one final thing. Obvious, and I've heard this from some delegates I think are thinking about overriding the governor's veto. It's that, the tobacco tax is also connected to this bill. I think that's a red herring that we all recognize that it is. If they want to pass a tobacco tax, they can go ahead and submit that bill, submit it as emergency legislation, and pass it tomorrow. So please keep that in mind when you're reporting. I just want to thank everybody who participated on this call: Lieutenant Governor, Delegate Kipke, Rebecca, Tony, Mike, Pasquale. Thank you so much, all the members of the media. You guys all know how to reach me. If you have any materials that you want, anything that we said today you want to follow up on, if the recording didn't work, let me know. Thank you very much.